Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Dave Chatterton of Strategic Farm Marketing. A higher day in grains, livestock, higher except for nearby live cattle and lean hogs. Okay, Dave, let's start off talking about corn and soybeans. It looks like we kind of bounced off support, but how much of this was short covering and positioning ahead of the Friday WASDE?
Yeah, Michelle, I think that's in a nutshell, that was the action today. We tried the lows on the downside early. We got to test that 415 level in December corn, test out last week's lows in the soybean complex. When both of those held, we did uncover a little bit of short covering here. And as you said, I think it's going to be a week that's all about positioning for the USDA report on Friday. We've got a very robust, I think, debate or discussion going on inside the trade about how the USDA handles their yields versus the dry August weather and what that's going to mean to the trade come Friday when the numbers get released.
It is, but what do you think is going to happen? Are we seeing a smaller crop, and will it show up in the Friday WASDE or not?
Yeah, it's going to be interesting, Michelle. I mean, keep in mind, this is the first report from USDA where they are going to use their own objective field plot data as well as the farmer surveys to project the yield. And so it's going to be interesting to see how they handle that. If you look at the pre-report surveys, they are looking for numbers that are lower than the USDA from last month in August, but not significantly so. And I think we have a different viewpoint when you talk to some of the folks, when you look down at like the cooperative, state by state, regional type surveys, particularly in the Eastern Corn Belt. That combination, as you mentioned, of high nighttime temperatures during August, dry weather, and kind of a very robust disease complex, particularly in the corn, all kind of adding up. And our producers and our early yields so far have been a little bit mixed, a little bit disappointing in a number of areas of the Corn Belt. We'll see how that goes once we get going here. But, I think the idea is the USDA is going to start on a path. How aggressively they do that is up for debate. But my suspicion is that they take rather a slow and measured approach here, as you mentioned, Michelle. Might be a little bit disappointing to a few of the bulls here in the marketplace.
Okay, so if that is the case, Dave, do you think then the corn market sells off?
Well, yeah, I think we certainly have that element, Michelle. When you look at the fund positions here, they're in a very neutral position. I think we're looking for a little bit of momentum one way or another. And, the momentum trade and the computer-generated trade that we have in this day and age, once we start moving one way, that's the direction that the trade will try and push it. As you mentioned, we were able to kind of hold some chart support here today, but certainly we could test that out. If not, push on it a little bit more. Do I think we're going to go set new contract lows? I don't see that as being the case or going back to those old lows, but certainly I think there's some room between here and there for the market to test the levels on the downside.
Right, and the funds have been exiting some of their short position, and so what's your sense of what direction that they might be looking to move?
Yeah, I think they've been squaring up positions just coming into the report, just as we get into harvest. This is a normal kind of seasonal thing here for them, as the market tends to seasonally want to turn a little bit higher. We did make those lows back in August. We've been able to rally off of those. We've given some of that gain back here a little bit. The question is, do we give up more of it? And I think, we're waiting for a clearer trend to develop. We need either a larger than indicated, production and yield cut from the USDA that tightens stocks, or we need something to develop on the trade front deal that shows additional demand coming into the complex to kind of get us off that dead center mark that we've been pivoting around here of late.
What about soybeans? Does USDA come down much on yield because the average trade guesses don't show that? And here, do they come down on exports as well because of the lack of China business?
Well, yeah, I think they'll soften the yield number again. I think that number probably ends up being lower than what the USDA shows us this month. We've got a long ways to go, that final report in January. But the big deal is I don't think the USDA has a choice in cutting export projections at this particular point. China has 0 new crop U.S. soybeans on the books. And just looking at the logistical schedule of booking a sale, even if it comes this week or next, you're talking 4 to 6 weeks before you can load that ship. So the September and October and maybe even early November sales to China from the U.S. have already been taken off the books here. We've got, November, December, and part of January left if we can salvage that. But China has been acting in a very aggressive way to avoid U.S. beans. And we got news over the weekend that China's August imports of soybeans were at a record high. Those beans primarily came from South America. Very few came from other places. They're stockpiling beans domestically. They've got higher reserves than what they have been running historically. They've already started their weekly reserve auctions, which is sooner than they normally would in the crop year. So all the signals are there that they're going to try and avoid as many U.S. beans as possible. Whether they can make it all the way through the season without buying U.S., I think is a little bit of a debate, but certainly that number looks like it's going to be a small or minimal type of an amount at this particular point.
Now, that's interesting, Dave, because you're one of the few people I've talked to that feels like they actually are trying to bridge the gap here to avoid the United States. So you don't think that they're going to buy any beans from the U.S.?
Well, I think they could buy some, Michelle. I mean, typically they're going to they're going to buy 20 to 22 million metric tons, almost 800 million bushels. I think it's less than half of that, certainly. And it may be closer to a quarter of that. If you look at these FOB values right now, Michelle, you're talking about Brazilian origin being $1 plus or minus higher than what the U.S. values are out of the Gulf currently. And in doing so, I think the government has sent the signal to the crushers of, hey, we're not buying U.S. beans. Don't do it. We'll be here to punish you if you do. And until that narrative changes, they're willing to pay that additional premium. And I think they're willing to release some beans from their reserves. So do they get a few sales? Do we get a few sales off to China late in the season, Dec or Jan? We probably do. But by that point, we're looking at the cusp for the new crop Brazilian supply being just over the horizon. And we know that switchover is coming. So it's a minimal amount, I think, at this point without a trade deal. And on that front, it feels like we're certainly getting further from a deal than closer to a deal here, at least at the moment.
Gotcha. Wheat, the pop that we saw today, was that just some short covering off these contract lows?
Yeah, Michelle, I don't see it really any other way. The path to sustaining an upside in wheat just gets kind of tougher and tougher as we go here. We're seeing record supplies here among some of the world's exporters. We're seeing the FOB offers drop again in Russia and in the Ukraine and in the Black Sea and European regions. So, we continue to chase elusive exports. We continue to not find those elusive exports here. The shipments data today would kind of tell you that. So, it just becomes a tough road to hoe. There's a lot of wheat in the world here currently.
Cattle saw a weekly reversal last week. We didn't see a ton of follow-through selling on Monday. So what's your take about where the market goes next?
Yeah, I think it is a key inflection point, Michelle. And I think the caution sign is flashing here a little bit. Last week, the first week in 10 weeks that we hadn't seen that nearby cattle contract close higher. And it's been a heck of an impressive run here. It goes all the way back to early summer. Having said that, I think we're in a situation where we're finally starting to see the cash market slow down just a little bit. We saw some weakness in the live market last week, maybe a steady market in the South. We saw the cutout, $5 lower week over week. So certainly it's post-Labor Day. The demand tends to slow down just a little bit here. I'm not saying it's a disaster, but, as hard as we've been going up and as quickly as we've gone up, as the volatility has kind of ramped up here, as we've seen funds, we're still got them not record long, but certainly holding a significant long position in the complex. We could be in for some volatility here, and those first few, serious corrections to the downside could be whoppers. Now, it's been a buy the break mentality on the part of the speculative funds to this point. We just have to see if that's still going to be the case here this week. Yeah,
we've had all shallow corrections. How deep could that correction be if it is a bigger one?
Well, yeah, and I think that's a good point. I mean, we were challenging last week's lows, here earlier in the market today, and kind of were able to hold those numbers. But even if you look at a 38% retracement, that's going to take your December contract back to that 129.50 type of a level. And I mean, it gives us a little bit of ground to work with here, but certainly I think there would be some nervous longs if we start moving towards those numbers.
Gotcha. And nearby hogs ended lower. Was that just some profit taking as well there because we just hit new contract highs in that market?
Yeah, exactly. I think it's kind of the opposite situation. The cash market there is leading the futures higher. We do have, what appears to be, robust fund buying again, and probably right at a record long from the funds in the hog complex. So certainly taking a little profit off the table at this point is not uncalled for. But the fundamental makeup continues to look like the deferreds are gaining on the nearby here and kind of closing the gap just a little bit and putting some premium in, and that's a good sign for things down the road here in the hog complex.
Let's hope so. All right. Thanks so much, Dave Chatterton with Strategic Farm Marketing. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.